and a very warm welcome to another episode of the Bitcoin Briefing. Today is the 10th of February and we're going to cover our rolling story of the last couple of days, which is of course Elon Musk and Tesla purchasing $1.5 billion worth of Bitcoin, transferring a significant proportion of its free cash into Bitcoin. A risk that the mainstream media is calling extremely risky, but the Bitcoin community has been waiting for quite a long time. It is in fact quite a predictable move. And we, of course, at the Bitcoin Briefing did predict this move a few days before it happened. Now, when I was researching the details of this show today, I did notice that the internet is just awash with news about this, all covering pretty much the same thing: what this means for price, what Elon has done, what's going to happen next. So I want to move away from that. I never like to do what other people are focusing on, so instead of the what, let's discuss the why. Why, in one of the most financially risky times ever, are companies making the move of swapping either all or some of their cash reserves into Bitcoin? To help me answer this, let's introduce Michael Saylor, who can speak far more eloquently on the subject than I can and is probably more experienced. Both of us are all in on Bitcoin, but of course, my holdings represents a grain of sand in the Sahara Desert of Saylor's wealth.
I think that the big challenge every investor, every person on earth has right now, all 7.8 billion people and all $300 trillion worth of investments, their big problem is, where's my store of value? And in a world where if I double the amount of currency, but I keep the assets and the goods and services constant, then that means everything has to go up by a factor of 2, right? So in a world where you're expanding the money supply, it's like expanding dropping the air pressure. As you go up in altitude, the air pressure is dropping, oxygen's falling out of solution, the heat is falling out of the air. You're going to freeze to death or suffocate. So everybody needs to find a store of value.
But David, I hear you say, CPI is only 2%, 2.5% at most. And I hear there are deflationary pressures going on, pushing consumer prices down even more. And I'd say you're correct. That is exactly the case. When we look at consumer prices, there are a huge amount of deflationary forces that are acting on it in a downward way. Oil prices are down, technology is constantly improving, advanced manufacturing techniques are bringing the costs of new products down all the time, every year. Media is basically free now. We used to pay for albums and DVDs and videos and God knows what else for $10, $20 a pop. Now we just have an $8 or $9 Spotify subscription. I don't know what the price is now, but it's significantly cheaper, and that's if you're just paying for it. It is available unpaid if you go down if you're torrenting things. COVID's going to put downward pressure on the housing market as inner cities, global cities, basically any working hubs will be hollowed out by the trend of people moving and working from home. So, thousands and thousands of companies all over the world no longer need to rent whole floors of large buildings to put office spaces in while their staff work remotely. This is inevitably going to ripple out into the suburbs and the wider property market. So yes, if you're just looking at consumer prices, and particularly CPI, which for me I think is a pretty redundant metric, it's incredibly arbitrary. You have people choosing what products and assets are going into the basket to be analyzed, completely open to, at best, misleading statistics, and at worst, dishonesty and corruption. Nevertheless, CPI is largely irrelevant for a large corporation when it's looking at its cash reserves. It doesn't matter what the price of milk and bus tickets and train tickets are at any one point. What matters to them is what large, very important assets they can purchase with their hard-earned working cash. They like to buy bonds, they like to buy property, equities, fine wine, paintings. They like to buy other companies, they like to buy stocks. And all of these things, respective to the dollar, is just inflating massively. It has been doing it for decades, and with the amount of money that the government is printing, it's not going to stop anytime soon. And as Michael Saylor said, he had $500 million sitting there in cash, and he was working out real inflation. Inflation against the asset he wants to purchase is closer to 10 or 15%, which means that every 5 years, that $500 million is worth half as much. And then in 5 years' time, you can only buy 250 millions worth of stuff. 5 years again, you're only 125 millions worth of stuff. This is the result of years, decades even, of hard work by hundreds or thousands of people. This is it. And for these CEOs to see it become worth less and less and less every year, particularly for a company like MicroStrategy, which maybe hasn't innovated really as much as, say, Tesla has, particularly for them, that money is it. That represents the future of their company. And if Michael Saylor hadn't have done anything and just allowed it to inflate away over the next few decades, that company would just become, another company that's just faded away. It lost its relevancy, it lost its competitive edge. And its significance as a company fades away as its balance sheet inflates away. To show you what I mean about this, let's have a look at some graphs. First up is the US money supply, which has been increasing anyway since Nixon put a final nail in the coffin of the Bretton Woods monetary system and moved the dollar and all currencies to a floating exchange. This really turns government money into monopoly money, not linked to, not backed by anything, and really is a massive confidence game. If we look at this, we can see that the money supply increased dramatically in 2008 after the financial crisis, when Ben Bernanke begged Congress for $800 billion. Otherwise, the world as we know it would end soon. And since then, $800 billion is just a drop in the bucket. The banks are printing trillions now, and it's not going to stop. This graph is an absolute joke, especially when you realize that every dollar printed represents a dilution of you and your family's hard-earned work. So this really sets up the context for what we're talking about. Okay, so next let's move on to 10-year treasury bills. In 1989, you were getting nearly 10% yields on a bond. That means to say that if you wanted a bond to pay you, so let's say £100,000 a year, you would need to buy $1 million worth of bonds. Now, bond rates are closer to 2%. Of course, we said CPI is about 2%, bond yields are 2%. Why would you ever buy a long-term bond that has interest rates that matches today's inflation in an inflationary environment? It doesn't make any sense. So, somebody that's sitting on a large amount of cash, bonds are no longer an option. They're not going to preserve wealth into the future. We can look at the 90-day T-bills. They're the same. They peaked in the 80s, and now they're not even 1%. They haven't been this low since the Wall Street crash and until World War II end. I mean, that really represents how serious this is. Let's move on to house prices. You don't need a graph for this, we all know. We look at the price our parents paid for their first houses. Mine, I think, paid at £13,000, £15,000, and now sitting on or have recently sold houses in the hundreds of thousands of pounds. Boomers, and this is not a criticism of them at all, have had the greatest run of their lives. Everything they've touched has gone up 10 or 20 times, whether that's their shares, their equities, or just their house. Okay, so then let's move on to the Dow Jones Industrial Average. This, again, has been on just a huge run for decades. It's very strange that we didn't have any kind of correction during COVID, but of course the government printers were just on overdrive, pumping out stimulus checks and, like pandemic loans and all of this, which has gone straight into the stock market and is why now we're pretty much at all historic times, even though we've had a year where basically nobody's done any work or produced anything. It doesn't make sense to me. It tells me that this whole thing is basically just a show. The market does not reflect reality, and it's just, especially when the money printers just won't stop printing. They can't stop printing. From the point of view of these CEOs, when they're looking, everything is increasing in price with respect to their dollars. The right thing to do is to they need to find a life raft. And so, what's left? Gold and Bitcoin. I'm going to do a show covering the different advantages and disadvantages of both gold and Bitcoin. But for now, the gold price is not increasing that much. It's only up 15% this year. This should have been the year that gold did really, really well, and it hasn't. Bitcoin is up 300%, and the reason why is people are looking for a life raft. These are the two life rafts. And frankly, because it's so liquid, transportable, censorship resistant, and all of its other benefits, people are choosing Bitcoin. I think that we're going to start hearing announcements over the next couple of days or weeks about other companies that are also moving their funds into Bitcoin. Larry Ellison of Oracle is a close friend of Elon Musk. And many people think that he is going to be the next person to announce a large Bitcoin institutional purchase, and it's very likely. Something that is slightly less likely, but I'm going to stake my reputation on a prediction that this year will be the year we hear Apple, that we hear Tim Cook and Apple coming out making a very large Bitcoin corporation. Now, I'm not the first to make this prediction. Zero Hedge have come out and said that they're expecting a 5 billion purchase soon. I don't know the amounts, I don't have any insider information, but I do have pretty strong conviction that they're going to do it for this reason. The first is they're sitting on like $19 billion of cash, and they don't know what to do with it. They've never known what to do with it. For like a decade now, they've not known what to do with their money. Apple like to pretend that they're an innovative tech company. They're not a tech company at all. They're this huge whale sitting on loads of cash from ideas that it made decades ago, and they haven't innovated a single thing since. Apple at this point are like if Prada and Hitachi had a baby. They make nice, really nice $1,000, $2,000, $10,000 items that are no better than their competition really, except for, they're shinier. They maybe work a little bit better. They're certainly not a significant technical step ahead than their competition like Samsung and other people. It's very different. When you look at a flagship Samsung compared to a flagship Apple product, there is very little difference except on the edges compared to when we look at, say, an old Nokia phone compared to the first iPhone, which represented several degrees of magnitude improvement. So the reason why I have this conviction is really that, because they haven't innovated. They have a huge amount of money. They are playing, or at least keep talking about, releasing AI self-driving software. But for me, looking at their rhetoric, I feel like they're very scared to roll it out. Maybe they're just being cautious and careful, but they don't want to roll something out too quickly, especially when Elon Musk is already like years and years ahead of them in AI. But really, as of 2021, that is the only move that Apple have got. Large strategic move is to go into self-driving cars. Other than that, what has it got? It's got wireless headphones. That's its big break over the last few years. Wireless headphones. Great business model, great product, I'm sure, but it's a joke really when you plot Apple's innovation curve. It's just been going like this. They have one shot, and that is, of course, self-driving, as we've talked about. But until then, buying Bitcoin, they've got billions and billions of dollars sitting in the bank. Just putting a fraction of that in Bitcoin would get them a huge amount of goodwill. It would be the first innovative and adventurous and, like ambitious Steve Jobs-esque thing that they've done in a very long time. And not only that, but they're in the perfect position to start integrating hardware wallets and Bitcoin wallets directly into the phone and rolling it out to their customers. And then, of course, Samsung and the rest of the companies would copy. And then, everybody in the world has suddenly got a secure Bitcoin wallet in their pocket. And really, at that point, the countdown to Bitcoinization is really on. I mean, there's no turning the ship around at that point. Okay, so that's it for today. If you like this show, give it a like and subscribe, and more news and analysis on Bitcoin coming up tomorrow.
What the hell I'm trying to say? Cellophane will light the way. No more stupid alibis. Only ends up someone cries.